All right, good morning, folks. We're going to get started here. As you know, if you were trading this market this week, we got some massive range expansion, huge sell off in the market, which was pretty much expected. I think 3 weeks ago I was mentioning that the market was overdue for a nice big correction, and that was going to give us some good trading opportunities. Today, what I want to talk about in relation to that is when we get this range expansion, guess what else happens? The volatility increases. And this can take people by surprise. You can look at the market and you can look at your charts, and yeah, there's a big moves taking place. But the nitty gritty volatility where you take your entry can get pretty extreme, right? And if you watch a lot of my older videos and stuff, one of the things I repeat often is that besides, getting the direction and our entries and entry areas and stuff down, the number one biggest challenge for day traders is volatility around the point of entry. So we're just going to talk about that today. Uh, let's just fast forward here. Now, the theme lately has been we've been talking about the YM algos. We've got the YM scalper and we got the YM momentum. Both of those caught massive point gains this week. All right. The trick was to get in and stay in. If you just followed, if you were able to ride out the volatility around the point of entry and take your entries, then all you had to do is follow the system trailing stop, and you scored, you know, 200 points, 300 points. One of the days we had 400-point runs. So the issue is that we get these kinds of big range expansions in the market about 3 times a year. You can bank on them. We don't know the day, obviously, but just you know put in your notes there that about 3 times a year. Now this was a doozy. Obviously, this was one of the record one-day sell-offs, couple-day sell-offs. But we do get about three good-sized moves per year in the market like this. So if you're a regular trader, this is like Christmas bonus. If you can be in, trading those days and catch some of these runs. And the last 2 weeks in the trainings, and the videos are up on the tutorial page now. You can go in and watch those in-depth trainings with lots of examples and lots of details. I talked about how the YM really delivers. The Dow's up at 26,000, so any kind of slight movement triggers lots of points in the YM futures. So now obviously all the future symbols, we got good movement out of them, but I've been focusing on the YM recently because the YM makes a really good, I think, a good starter symbol for folks, because all you have to do is catch some nice, hook into some nice moves. All right, so today let's talk about a couple things related to the volatility. Volatility is a double-edged sword, meaning that we need volatility to get the party started, right? If there's too little volatility, as a matter of fact, let me go to the slide that I showed in last week in the video. So volatility is a double-edged sword. If we have super low volatility, we can get hooked into entries and there's no follow through. If we have super high volatility, we can get really good movement in the market. However, the intra-bar moves can be really wide range and spiky, and they can easily just chop us up and knock us out. Okay, so what I talked about in last week's video, we got this sweet spot of volatility that's really conducive to trading. That doesn't mean you can't win if you trade in a low volatility. It doesn't mean you can't win up here. It just means that this is the easier area to trade, right? You're hooking into entries and they're taking off and it's smooth, and right now the reason that I'm talking about this is because this week we had massive volatility. So this is, I'm going to give everybody a word of warning here, and you probably found that out if you were taking entries, that you can be right as rain about the direction of the market. You know, it's going to go from point A to point B, right? Up or down. However, the volatility at the point of entry can be so extreme it can chop you up. So, one thing that I recommend you do is to give you an idea. All right, there's not an easy cure for this, but this will give you an idea. I preach all the time, like, hey, keep your 1 minute trading chart if you're going to trade off the scalper. Keep that super simple and don't put a lot of crap on there. Just keep it, use the dynamic trigger range and that's it, bar timer. However, you might want to put an ATR on there. I've talked about this in the past. I did a training on ATRs. But a real simple ATR is just you're on a 1 minute chart, and what I recommend you do is you can use the plot style, the bars, fatten them up a little bit. I put 8 here just to show you. And this will give you an idea of what the volatility is and the range on each bar. So you can get a heads up. So we had some massive volatilities during the last couple of days this week. That'll clue you in that, hey, it's extra dicey. Doesn't mean that the trades won't work. It means that your number one challenge is to not get chopped up like a frog in a blender trying to take an entry. Okay? So a good analogy is just think, if you're in a sailboat race out in the ocean and a hurricane comes in behind you, yeah, it's going to blow you a whole lot farther, a whole lot faster, but it could wreck your ship too. So that's the way you want to think about these big range expansion days and high volatility days. So there's not the only remedy for that is to just try to take your entries a little bit finer tuned. There's only so much we can do, right? If we're going to play off the dynamic trigger range, but yeah, your whole goal is to hook in to a move. Don't make too much out of it. Just look at the bars, and you can get an idea of what each 1 minute bar, how many points you're traveling, right? Normally we see, like this image here is kind of normal. We see 10 to 20 to 25 per points per bar. So this gives you this clues you in. You want a real simple bar type, and what else did I want to say? You can turn the calculate on bar close off. So you can kind of see how the current bar is. I recommend you always on your 1 minute chart you put a timer so you can just see the countdown. That way you can clue into, if you're watching the ATR, you can see, oh, we got 2 seconds left. Okay, so that's about where we're going to finish. See. All right, so let's talk about another topic. All this stuff that I got here is in the previous video, so we're not going to rehash all that stuff. But let's talk about the entry here. I mentioned that you can take your entries after a 1 or 2 point move just right past the barrier. Okay, you can use a buy stop order to trigger you in. You can just, if you know what the high of the range is or the low range, you just put that in. Or you can wait and watch the activity. Sometimes we get little pop-ups and come back a little bit and then go up, back again. And remember, it's a balancing act. Some of the moves are going to bust across so fast that the only way to get in is just have that order sitting there, or pull the trigger right away. You can use a market order, just boom, get in. Other times we're going to wiggle around. Now here's the thing. Some folks have said, yeah, I tried that and I got stopped out. Well, yeah, obviously. There's going to be times it doesn't work. I talked about we protect the midpoint. Oh, the other thing I was going to mention is if you looked at some of the ranges this week, the midpoint, we're talking about massive distances. So just to reiterate, I think I mentioned this in the video, at a minimum, you want to protect the midpoint. If your stop is set to 20, leave it at 20. Okay. Don't, if the midpoint is 50 points below, yeah, it's the idea is if we've got a tighter range and your ATM stop is 20 and then the midpoint's 14, yeah, then slide it up to 14, right, to protect the midpoint. Now here's the thing, keep in mind that what you're trying to do with the like the YM scalper is you're trying to hook into a really decent move, and there were like massive moves this week. Okay, all if you sat and watched or traded these, you know what I'm talking about. Okay, however, it didn't mean that it was a cakewalk or every time we popped across the barrier, you got into something. As a matter of fact, the other day I got knocked out twice before the third time was a charm, and that's the one that caught the biggie. So that's entirely possible. So when you're playing this, remember I talked about you want to just pace yourself. Three, think in your mind up to three entries. That would be up to three full stop outs. Three full stop outs is your max drawdown. If you catch a trade and you get to break even and you get knocked out, that doesn't count. It's a foul ball. You still got three left, right? The point being is, if you're going to play this method, it is a slot machine. You are pulling the handle. Okay, it's a gamble. Get away from, especially in these intense markets we've had. Get away from like worrying about Swiss clock precision. All right, it's not going to help you. The YM is very whippy, moves really quick. So if you go in and you got stopped out three times, don't freak out about that. That's you pulled a slot machine, you gambled, and none of the spaghetti stuck to the fridge that day. It's that simple. Uh, so don't worry about don't think anything's broken. You're doing anything wrong. The configurations are wrong. No, there is a point where it just becomes a crapshoot. Okay, and that's all trading is like that. But the YM scalper, remember the whole idea is to get hooked in. Today, the short we just got out of, 170 points. Okay, if you just rode that down, you made bank. You paid your membership the whole year or more. So the point being is that, yeah, don't freak out. Get in the habit of if you're going to play this power scalper system that I talked about last week, where you just key off the trailing stop, right? You're going to follow that trailing stop. Don't pick your targets, okay? The only thing you want to do is if you're playing size and you want to do a delta and cut in half, then go for a quick 10 points or 15 points, whatever, and then cut in half. But just follow the system trailing stop. So the point being is this: in a high volatility market, you may suffer some stop outs. Like you might get hooked into a trade and it immediately reverses and goes down and hits your stop. Uh, that can be frustrating and that can annoy you, but you're rolling the dice is what you're doing. This is electronic gambling, folks. That's what trading is. Get away from thinking that trading is like this, investing, and it's not. We're doing electronic gambling. It's legal and it's fun, and we get to use all this high technology. It's worldwide, so hey, let's play the game like everybody else, right? So the point being here is even with the volatility, take your best shots. Try to pace yourself out a little bit. If you get knocked out around a certain area and you can see the price is really fidgety around that area, back off a little bit. You don't want to like burn through all your ammo just right away. You got that? If you take like two stop outs, take a break. Come back a little later, see if there's another setup that's looking conducive. Uh, all right. The whole idea is, you can have two stop outs and then get hooked into one of these 200-point runners. Easy. So it's all a little bit of the, luck of the draw there. Yeah, again, the break even Your goal is to get to break even relatively quickly. Uh, Use the 3 bar trick with a 1 minute chart. Okay, and remember again, the YM is very whippy. You can get in, it can start moving in your favor, and then it can do a quick reversal and go all the way back and hit your full stop. Right. So if you got a chance to move to break even, take it or get close. The other thing I talk about all the time is hedging your position. So let's say you went in with 2 contracts. Well, you could get to break even on one, right? Strict break even, move your right. And why would you want to do that? Well, because sometimes in high volatility markets, you will the price will come down and just knock you out before it takes off again, and then you're sitting there scratching your head, not in, right? So it's a little bit of a balancing act. Trading is a little bit of a crapshoot. We are pulling the slot machine lever, but the good news is that again, massive point runs we've been seeing, and all you got to do is have enough faith to hook in and catch some of these big runners, which have been very frequent with the YM lately. Okay. Uh, I'm kind of reviewing a bunch of stuff that people have asked me over the last couple of days, and now let me broach one question that came up, which was yesterday we had the scalper caught like a big another 170 point move to the downside or something, but the YN momentum didn't. So the question is, well, why, the scalper gave us 175 points and the momentum system didn't give us nothing, right? Later it did. Later the momentum system did catch a down move that was substantial later in the day. Uh, well, and so the obvious answer, if you go back and watch my videos, the momentum system is designed to try to catch the big directional move of the day. Yesterday, the market didn't start off the market actually started off moving to the upside, which the scalper caught like a big move to the upside. And because the scalper is the scalper and it turns on a dime, it caught a big down move, which, like I said, was like about 175 points down. Trailing stop caught, trailed all the way down. Whereas the YM momentum system was just still sitting on the sidelines, right? That could lead to some confusion, but don't let it confuse you because, again, the momentum system is not about trying to catch every wiggle in the market. It's about lining up with the big macro setup of the day. And just because the scalper caught a bunch of points, the momentum system, the YM-M, didn't have the macro setup until a little bit later in the day. That's all. You might be able to go long, go short, go long in the scalper and grab all kinds of points, and the momentum system gives you nothing that day, right? That's totally possible. But they're just two different types of algos. And the other thing is this. So imagine, let's say that, and we've had days like this, the momentum system gets you long, and then you stay long till the end of the session and end up with a big move in your favor. However, the scalper went long, went short, went long, went short. So you were playing basically the waves. You see the difference? So don't get too confused about that. Now, one of the questions, a great question I had was, well, if you're supposed to get it on the momentum system, right? If you're supposed to get in early on that, how late is too late to play an entry, right? Or look for an entry. So here's one thing I'll recommend. The big moves that we can catch out of the momentum algo, usually you're going to get those in the first couple hours, right? Because you're trying to take advantage of a long range day. Long range days typically blast off from the open relatively soon, and they keep on a trucking. There's like an escalator going straight up, or you're going down all day, right? So the entries on those are relatively early. Here's what I recommend you do. If you don't see an entry in the momentum system early on in the day, like the first half of the session, you can switch over to the scalper. and look and trade the last 2 hours of the session. We have a day type where the market will be flat most of the day, and then it does some big move into the close, right? Usually based on news. Right? Positive news, the market will blast off into the close. Negative news, the market like wakes up and sells down like the final 2 hours. Okay, we see that. That's one of the big macro patterns we see. So my recommendation is if you're playing the momentum system and you don't get hooked into a trade early on, but there looks like there could be maybe there's movement into the close, you switch over to the scalper. All right, because it's going to be a lot more dynamic and adaptive, the scalper mode. All right, it catches the same big moves too, right, as we've seen the last couple of days. It's the trailing stop is very tight. It follows along. All right, so that's the difference between the YM scalper and the YM momentum. Our biggest challenge in trading is over trading. Besides the volatility at the point of entry, right? That's the biggest challenge. But one of our challenges is not to over trade. You know why? Here's what happens. I mean, this classic. I've done it. Lots of people have done it. I've had new people come in that I've kind of helped mentor and get going and got them to where they built up like several $1,000s of risk capital, right? And I'm like, good job. You got the plane off the runway. A week later, they crash it. Why? Because they got hooked into over trading that day. One guy even told me, he goes, I don't know what I did. I was like a retarded monkey that just started pressing buttons and I couldn't control myself and stop. And I lost my whole account. Right? All you had to do is if you had 3 losses, you just stop, walk away, turn the computer off, go do something enjoyable, go eat, go to lunch or whatever. Uh, you want to survive to come back the next day. The next day can give you, make it all up and then some, right? So overtrading is a really nasty trap to fall into. And the problem is that psychologically what happens is here's exactly what's going on in your head. You're going like, well, I know this works and I'm a good trader and all I got to do is if I could just make this up, then I can keep going and I can finish the day positive. Well, a day that's going to knock you out 3 times is a day that's not conducive to taking entries, right? 3 strikes, you're out. So take a hint. Okay, the market, the neat thing about trading, if you do it correctly, is the market will line up with our stuff, and then everything can be a cakewalk, right? Like the market just hands you stuff in a silver platter, and you just go with it. If you're getting stopped out, if you have 3 stop outs, take the hint. The market's it's not making it easy for you that day. Don't try to force it. All right, so anyways, that's a little preaching about that. I talk about it all the time. It's frustrating, but remember, your job is to survive for the long term, and remember, you're playing statistically over the series. If you get banged up one day and 3 stop-outs, just walk away, come back the next day. The next day could be smooth as butter. If you wipe out your account that day or you take huge losses, then the next day, guess what? You're going to be gun shy because you won't want to. You're going to be going, oh God, I'm going to hit more stops. And so get in the habit of, figure out. You can calculate like what would be your max drawdown on your configurations that you're using if you take up to 3 entries, and just be ready to accept that. That leads me into trading off a risk capital, which is you want to watch my video on that. Trading off a risk capital will make the start of your trading career much better, much easier. If you trade off of a fixed account size, like let's say you start your account with $3,000, right? And that's all you got, and you're going to start trading, and your dumb luck, you start taking some drawdown the first week. Week 2 you open up and now you got $2,200 in there, right? You lost $800 and you're going, ooh, depressing. Plus, you just lost some firepower. You're kind of damaging the engine. Trade off of risk capital. Send in your 3K. Then in a separate, and I stress this, watch the video. It's a good, really good video. That's a video that will change your whole approach to trading. Okay, it's on the tutorial page towards the middle part. Fund your account, lock that in. That is you got a titanium vault around that amount of money, right? 3K, you can't lose a penny of that. You send in risk capital extra in a separate transaction. The reason I tell you to do that, it sounds silly. When you get your account, your original account funded. Now I know a lot of you folks are already trading and you got your accounts and maybe you have drawdown on all this, but if you want to start fresh, get your account to a certain level, 3K, 4K, 5K, whatever, like a nice level. Take a screenshot of that, print it out, put it in a frame, and put it on your wall. All right, sounds silly, but this, half of trading is kind of mental and emotional. So that is the level you can never go below in your account. Right. On top of that, then you would, in a separate transaction, send in some risk capital, $500, whatever you can send in, and this is what will make you a successful trader. Only trade off of risk capital, and keep the risk capital going in, and that's what you get to trade off of. So now you might say, well, I don't got any risk capital. I only got my account. Well, then guess what? Don't trade until you get risk capital. Figure out what to do. Sell the junk car in the backyard. Get a paper route. Whatever you have to do to generate extra cash. You got your wife's old diamond ring is laying around. Sell it on eBay or whatever. Get that risk capital. Send it in. Only trade off of risk capital. The reason why is because then you can eliminate the fear. You'll never gonna if you start your account with 5K, you'll know 100% in your head you're never gonna lose any of that 5K. It's always gonna be there. Especially if you have your significant other like breathing down your back, you better not lose all that money. You can guarantee them, hey, I'll never lose a dime of this money. It's gonna always be there. This little methodology, I used to call it, well, I still call it the pay to play methodology. You're working off of risk capital, and therefore you don't fret your stop outs, right? If you don't overtrade on one given day, you respect your max drawdowns for the day, like the 3 stop outs, and you're done. If you do that, and then if you let's say that your account, here's an example, your account's 5K, you send in $500 or $800 of risk capital. And in 2 weeks, you kind of, or let's say in 1 week, you burn through that and you get down to, close to using it all up. No big deal. Just if you got to wait 2 more weeks to get a paycheck to send in more risk capital, or you got to sell the sailboat out in the backyard that's been sitting there resting, whatever you got to do, just go back to sim, keep focused on the markets, keep your learning going, and then start the process over. Now, you might go, well, yeah, I'm still losing money. Well, you're still losing money, but you're not wiping your account out. Think of that as your fusion engine to generate profits. You're not destroying that. And it's pacing you out. In other words, it's forcing you to go a little bit slower. You're going to go, okay, I got to wait 2 more weeks to send in some more capital. No big deal. Eventually, statistically, you will hook in and get your account moving in the right direction. Then you don't have to spend any more risk capital. So this is just getting the plane off the runway on a new account trick. Highly recommend you follow that. I get emails once in a while from somebody that I blew my account out. Well, I thought you were supposed to be trading off of risk capital. Well, I didn't do that. Yeah, do yourself a favor, watch that video, and in fact, let me show you that video again, where that is, just so you know. That video is right here. If you scroll down, it's like, I think it's the last video, trading off risk capital in your account. Watch that video. All right, it'll take the emotion, a lot of the emotions out of the picture. Okay, here's a great question. As a matter of fact, I was going to cover this topic in my mind. I was thinking about talking about this, so thanks for the reminder. The question is this: today on the YM Momentum, the initial short was at 25 331, which would have allowed you to easily get to break even on the three bar trick, right? Let's say you got knocked out and wanted to try again. Where would you re-enter? Close to the barrier or lower past the pivot at 25 to 25? Okay, good, great question. Um, okay, remember when we take an entry, it is a crapshoot, or there's an element of a crapshoot. So the question is, if you get knocked out, break even, should you try to re-enter, or how do you re-enter? Okay, great question. Here is the way you want to think about that. The levels in the market are the levels in the market. So one, and I talk about this in other videos, get away from thinking that the system is trying to tell you, hey, this is a great entry here. You know, you got an alert and it's saying, hey, this is where you got to jump in and take a trade. The system's not designed that way, and this is not a cop out or any way to, like, wiggle out of anything on my end. This is just the way you want to think about how the system is designed and how the markets actually work. The levels are there. Then it depends on how do the players run the ball across the line. So think sports, right? If we've got the line of scrimmage on a football field, we could end up with a quick move, or they could be the players could be stuck there for several plays, right? So the point being is, it's the same way in the market. These levels are there, and they're meaningful levels for movement, for impulse moves to build off of. All right, think about it that way. How the participants run the ball, or move the price around those levels, is our challenge. Some days we get the quick breaks where they take off and they just run. There's no interference, and they score the touchdown. Other times it's a tug of war right around the barrier. So then the question is, well, if I get knocked out, should I get right back in, or how do I get in? Now, that I've talked about in the videos, in some of my past training videos. You can go back and watch some of those. I talk about how you could use like the 8-period SMA to help get you into a re-entry. You use the 8-period, and there's a couple little tricks to if you got knocked out, break even. There's a couple little tricks to know where you could catch a re-entry. Okay, so that's probably the best way. But again, there are times where, and it's called the kiss goodbye. Let's say that price takes off across the barrier and then falls back and hits the barrier and knocks you out. Okay, because you got in a few ticks points past the barrier. But then it's just going to bounce and take off again, right? So again, the element there is, hey, you didn't lose on the first entry, and price is right back towards the barrier, and you got a 50-50 shot now that price is going to go back in your favor or go down and hit your stop. So you could in fact just pull the trigger back towards the barrier. Sometimes we'll see a price break across the barrier and it fails, and it just runs all the way back to the midpoint of the dynamic trigger range. And then you're right back in all that congestion. The concept, for all you new folks here, the concept of the dynamic trigger range is that this is all based on noise suppression. What I did was, instead of trying to come up with like the fancy trick setups, there's like 1,000 different ways to create setups. I invent a new setup every day practically, just looking at charts and stuff. So concept here is that a setup is a setup is a setup is a setup They have win rates and failure rates. That's all the same. That's where you end up with, the way to make it work is your money management. The dynamic trigger range is the same thing. We'll have failures there too. The difference is that what I did was I developed 5 different ways to evaluate market noise and mixed them in so that we've got this hybrid noise suppression system. So the whole goal of the dynamic trigger range is that if the price is wiggling around inside the range, just think of that as noise. The barriers are where the party is likely to get started because price is going to be breaking out of the noise, right? That's the whole concept. Just like anything else, the market throws curveballs and morphs and changes things up, and things go out of alignment and all that kind of jazz. And that's true of any strategy, any setup, any system, whatever. So you may see, for instance, price. Let's say you had a dynamic trigger range of 50 points for the YM. All right, you could see price bounce off the bottom and go run all the way up to the top and then run all the way back down to the bottom, and you're going, wow, that was just 100 points of movement. We missed all that. Well, you got to have thresholds and limits and rules and stuff at somewhere, right? Otherwise, you're just trying to play every single wiggle. You see what I'm saying? So don't get frustrated if you see price make a big move. This happens. Let's say price makes a big move off the bottom of the dynamic trigger range and runs up to the top, and you could have caught like 20 points, right? And then it tries to break the barrier, and you get in, and then you get stopped out. And you're like, oh, that sucks. I should have got in lower, right? Shoulda, woulda, coulda, right? So you don't want to fall into the shoulda, woulda, coulda trap in the markets. You gotta have some plan that you follow, and just work through the series. It's that simple. We gotta have our rules and our thresholds and our limits and tolerances and all that somewhere. We gotta have it defined at some point. So in other words, the whole point of what I'm talking about is don't get frustrated about what's happening inside of the range. It's just the nice thing about the dynamic trigger range is that it is and this is another thing I designed on purpose. It's a visual thing, right? You all throughout the day, you know what the dynamic trigger range is, right? You just adjust it and move it, or if you're using my Ninja 7 indicator, that just does it automatically for you. So what's nice about that is you can see what's happening instead of like sitting there like twiddling your thumbs and pulling on your hair and like your eyelids drooping, waiting maybe for some alert to pop up, right? By some little trick setup out there. The dynamic trigger range, you can see the range and you can see price getting close. And so what the software actually does, and the system does, it's real simple how it works. It creates the dynamic trigger range, which is the noise area, and it just alerts you to when price starts getting close to one of the barriers. That's all. Right? When you see the alerts, you're getting 2 proximity alerts. The first alert is when we get close, and the second alert is when we actually touch the barrier. And that's just to wake you up and say, hey, the players are right at the line of scrimmage here, and they could get the party started and start running the ball here soon, so let's watch to play it, right? So it's a nice concept. It keeps you, gives you those visual reference points all throughout the day so you can kind of see what's going on. It also helps you see how the market's behaving. And actually, this is a great topic for a training. You can actually get a bunch of information about how the market is behaving that day by seeing how it's behaving in the barriers, right? So picture this in your mind's eye, right? If price is wiggling around and going up to the top of the barrier and then going back down to the midpoint and then going down to the bottom and then going back to the midpoint and then, right? What does that tell you? No energy in the market. Nobody wants to get the party started. we'll have days where you can get quick spikes out the barrier and then it quickly drops back to the midpoint. And then it goes the other direction and spikes out. That's a day with a little bit more energy, just enough to maybe hook us in. And those kinds of days are days where we're either going to get some stop outs or we're going to get to break even, but then get knocked out of break even. The higher energy days, they bust it out and they keep running with it, right? The market goes on a tear. That's what we've seen this week. Massive point runs, massive point runs. A lot of volatility though. There's been some, breaks of the barriers where you get hooked in, and so again, this is throwing spaghetti at the fridge. The way you score bigger is not by trading more. It's by increasing position size on what you're already doing. So when it comes to the number of trades, it's just like the old light beer commercial. Less is better. Okay. Big trap, you have 2 or 3 winning trades and you go, "Ooh, this is great. I'm going to keep going," and you give it all back. I've been there, done that. I have all kinds of great stories about overtrading that I've done, and one of my good ones was where back when I was day trading stocks, I hit my quota, or I got really close to my quota for the week, which in those days was like 3K or something for the week in day trading stocks. I was trading on a big leveraged account, and it was a Friday, and I was really close. I mean, I was like a couple $100 away from just the quota, and I took a couple break-even stop outs, and I took another little stop out, and then I thought, you know what? I just need one good move here to get my quota. A little voice in my head was going, "Quit, go away from the computer, turn it off, leave." I used to have a habit where every Friday at market close, I'd go down, or when I stopped trading, I'd go down and have lunch at my favorite Italian restaurant, order a bottle of wine, and just me. That was my like little end of week reward thing I did. And a little voice in my head was just like going, "Go to your Italian restaurant, get your lasagna, start drinking wine," right? I didn't listen to myself. And I said, "Oh, I'm a master trader. I'm going to play hardball in the market," right? So um, the rest of the story you can probably guess. I not only did I give back the entire week's gains, but then I went like $1,800 into the negative. Wanted to kick myself. So the moral of that story is over trading is just, it's a bad trap to fall into. Don't try to push the market. Try to be like a computer robot as much as you can, where you just follow the statistical trades. Throw the spaghetti at the fridge the proper number of times. If it don't stick, it don't stick that day. Okay? I'm telling you, some of this stuff sounds goofy, but I'm telling you this stuff because this is how it will work for you. It keeps you from getting frustrated. You're following a regimented plan, and by doing that, you will hook into the big moves that make it all up and make you the profits. As many of you know, we have a companion indicator for the Ninja platform that works along with the alert software. So it actually plots the dynamic trigger range right on your chart, and it has a bunch of other bells and whistles for you. So we've had it available for Ninja 7, and now we finally have it for Ninja 8. If you're a Ninja 8 user, or you want to switch up to Ninja 8 and get the new dynamic trigger range indicator for Ninja 8, shoot an email through to info@investingsystems.com. Okay, so this is the long-awaited upgrade for the dynamic trigger range indicator. Now, if you're not a Ninja platform user, I still highly recommend you get your hands on this, because you can get set up with the Ninja platform as a free demo for a few weeks. They give you the live data, no charge. It's really easy to set up. It's very turnkey. Just download a few things and boom. And even if you're trading through another platform, you can run this simultaneously on another monitor and just get your signals to trade from off of this. I think once you see this dynamic trigger range on the chart indicator working, you'll fall in love with it. It's really great. Uh, Everything's very visual. You get the lines adjust all on their own. So that's the main thing, so that you don't have to do much but watch. And like I said, it's got all kinds of bells and whistles. So see, the whole concept of the dynamic trigger range is to help simplify things, right? Simplify, 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 and have visual reference points to work with all throughout the day, and have like a regimented plan with preset configurations to use, right? It eliminates all the guesswork in trading. Your biggest problem as a day trader is frivolous trade entries that aren't based on any kind of plan. Okay, it's too easy to fall into that trap. Even if you're even if you can have something that you're following, the downfall of many traders is that they go, oh, this is great today. We're hitting it. And start taking frivolous trades, and then that aren't based on anything. So you want to be really, really regimented. It's too easy to just give it all back because you feel like you're in the groove, and you're like, you see price starting to move in a certain direction, and you've been hitting it that day, and you're like, oh, I'll just jump in again, right? Uh, Only to hit a full stop out, right? Or two in a row. So you got to control yourself. This is part of the whole discipline deal, is control your emotions, control your actions, regiment yourself. And so one of my big things is to simplify everything. And if you're going to follow the dynamic trigger range, um, you're going to follow the scalper dynamic uh, trigger range scalper mode on a 1 minute chart, and you're going to follow the momentum algo on a 5 minute chart, right? And that's all documented. But here's the thing, you don't need a whole lot more on your charts, right? All of the technical analysis is already built into the dynamic trigger range, right? You don't need all the oscillators and indicators and stochastics and moving averages and all that shit. If you want to continue to plaster all that stuff in your charts, you can. But if you really want to simplify it, because here's the thing, you hit a point where it's not going to do any extra for you, right? If you follow the regimented plan, and you take the trades, and you use the proper configurations, and you pace yourself, and you respect your max drawdown, 3 stop outs, whatever, the whole strategy will work for you. And so in other words, don't overcomplicate it. Okay. However, there's one chart extra that you could put up that will give you kind of a bigger picture, which will help you see things, right? And again, I don't recommend you do too much more. If you're going to follow the system, just try to keep it simple. You're going to catch the big runs. The trailing stop keeps you in. Just follow what the system's telling you to do. That's why I designed it, right? To dumb it way down and keep it. I mean, there's a level of complexity with the configurations and some of the rules, right? But beyond that, so remember, trading is divided into two parts. One is the technical analysis in the decision making about where and when to trade, and see, that's what the dynamic trigger range already does for you. And the other is the trade management, and that's where your configurations and your whatnot, and also the system trailing stop comes in on that end to help you with that, right? Now, there's one other thing you can do. Create an anchor chart. An anchor chart basically is a chart that's going to give you like the big picture. And the reason this can be helpful for you is so you can get an idea what the market's up to that particular session, and then not get frustrated. Don't look at the dynamic trigger range and go, oh yeah, I got stopped out, I got stopped out, I got stopped out, oh yeah, this sucks. Well, the dynamic trigger range is doing its job, right? Remember, the concept of the dynamic trigger range is all about noise suppression, and we get these levels in the market to work off of that in the end give us like 5 to 1 positive traction odds in our favor when price crosses. Okay, so those are built-in odds we get over the series. However, we know not every day the market behaves the same way. Some days we have really good trending, smooth trending days, and other days the market's very choppy and sloppy. That's the nature of the market. The market is what the market is, and the market's going to do what the market's going to do. We have to trade around that. We have to play the market. Some days the markets are super conducive to scoring big points, and some days the market's a a bleep, and can really stab us in the back. And so again, this is all about playing the market. Now, simple chart you can set up. And if you really want to simplify your whole trading strategy, let's say you're going to follow the scalper system, one of the scalper algos. Let's say you're going to follow one of the scalper algos. You're going to put your dynamic trigger range on the 1-minute chart. That's where you're going to maintain your high and low, right? And you're going to get your triggers off the 1-minute chart. And then you can have another chart, a 15-minute chart. So here it is, real simple. 15-minute chart, 15 SMA. Okay, this is your anchor chart. This is going to show you at a glance how trendy or not trendy the market is. So here's an example of a market that you can see. Obviously, it's in a strong uptrend that day. This is like basically from the open to towards the close, right? You don't worry about the day or the times or anything. We don't care about that in this image here. I just want to show you the bare bone basics, okay? Now, two things, slope and side. What is the slope of the moving average and which side is price on, right? So the answer to that simple question is the slope is up and the price is above. Market's in an uptrend. Okay, higher highs, higher lows. You see that? So this is a day that's very conducive for the dynamic trigger range because we're going to keep breaking those dynamic trigger ranges higher and higher. Your momentum algo is probably going to get you in down here, and you're going to hold all day. And your scalper will get in and follow it up, and then you'll get taken out by the trailing stop, and then you'll get a new dynamic trigger range that'll form, and you get a second entry. You follow me? So you might have lots of trades entries throughout the day, but you can see you're in an uptrend. Now this is all basic stuff, but again, you don't have to overcomplicate things, and there's a limited amount of information we need to just make some basic decisions, and anything more is superfluous. It doesn't help us. Okay. All right. Here's a 15-minute chart. Slope and side. You can see the slope of the 15 SMA is down, and the bars are on the bottom side, right? So we got a downtrend. Again, this is like the beginning of the session. Here's towards the end of the session. This gives us an idea of what the market's doing that day, right? Because if you're staring at a 1-minute chart, you're not going to be able to see the forest for the trees. So this shows you the forest. Okay, now let's look at some choppy, sloppy days, and these are all like recent examples. In the last couple of days, we've had some chop, and that's the reason I'm actually mentioning this, is because even though the scalper and the momentum dynamic trigger range have caught some big runs, there's also been some choppy, sloppy stuff that we've had to deal with. So here's an example. Okay, you can see how we don't have such a great slope on the 15. You can see it's sloping up, it slopes down, it slopes up, and then we've got price back and forth closing up and down. That is a non-trending sloppy day. All right, this just so you can keep things in perspective for the particular day. Your scalper probably got you in here and you caught a nice move, and your momentum algo probably got you in here, but then the momentum algo probably ended up stopping out, probably around break even, if you follow the simple rules about how to get to break even and whatnot, right? Your scalper probably did okay, because here's an example. The scalper probably would have caught a nice short here and then a long here. So the scalper would have gave you lots of action, but again, remember, This is a non-trending day, very wavy type of a day, big, and these are 15-minute bars. So look at, so the market goes down for a half hour, and then for the next hour or so, 2 hours, it goes up again, and then comes back down. So the market was all over the place this day. Okay, now the 15-minute chart is a difficult chart to try to trade the E-minis off of, and the reason why is because the ranges are just too dang big. Anytime you trade off of a particular time frame, you need to base your stops on that time frame also, right? I mean, you can. I mean, you could get, you could try to, Rambo it and try to take an entry off the 15-minute and then try to go down to a 30-second chart or whatever. But typically, when you have a setup or an entry off a particular time frame, your stops need to be based off of that time frame also, because it has to do with the follow through of the pattern on that chart that we're playing off of. And the ranges are simply too great. You have 150 point stops and stuff. Okay. Um, Here's another recent session that we had. Look at this. Up, big spike down, then right back up again, and then down again. So again, the scalper algos can do okay in this because they're going to catch these turns. The momentum algo might get you in, and then you might get stopped out, or you might hit the trailing stop. You might get your break-even stop. So just keep this in mind. Not every If you're going to play the momentum algo, which is trying to catch the big macro move of the day, this kind of a day isn't going to be conducive for that, and it's just one of those days that's a dud day. And I've talked about that in the training videos on that. So you can go and check that. So here's one more example. Now here's a day where you can see things are kind of flat. You see how the 15 period flattens out, the bars get really narrow. This is a very dull dud type of a day. A lot of volatility after the open, and then it just fizzled out, right? So this is the easy peasy way to just kind of look at a 15-minute chart, get an idea of what our market's doing. Okay, it becomes kind of obvious on these charts. Now, just to quickly review, the other thing you can do is on your 1 minute. You can do this on your 5 minute also if you're doing the momentum. Remember if you're going to follow this scalper algos, you use a 1 minute chart. This is how we have everything calibrated. It doesn't run off of 1 minute, but I've got the calibrations for your entries, and your trade configurations are all configured for you to work off of a 1 minute. And then the same on the momentum, you want to focus on using a 5 minute base chart. All right, you can go in and set up a basic ATR. You want to set it up so that it's a bar style, and your period is 1 because you just want to see what each bar is doing, so you get an idea of what these ranges are. Okay. And I'll just cover this real quick again. Now this is the YM Super Scalp configuration. There is okay, so your Super Scalper configuration for the YM, this is kind of the one shot, one kill. 15-point stop loss, 12-point target, and then in the Ninja platform, and you can do this in most platforms, this is a, one order cancels the other type of order. When price gives you an 8-point move, you want to auto slide the stop to -5. Okay, this is what helps skew the odds in your favor over the series, because you don't want to do one of the things you don't want to do in trading is either just win or lose, right? I'm either going to get 12, or if that don't work, I'm going to lose all 15 points. Don't want to do that. As you get forward movement, you want to decrease the risk on that trade. Okay. So what you end up is you don't end up with a 50-50 coin bet flip, either win or lose. You got the gray area, which is where your stop gets slid up, and maybe you only take a 5 point stop out if it doesn't work. So if you get really good at catching your entries, the majority of the time you can either hit the target, or it's a 5 point stop out versus a 15 point stop out, right? And so that gives you your really good 2 to 1 2 to 1 odds, right? 12 points, you're capturing 12 points and you've risked 5. Now you will have the occasional full 15 point stop out. But see, this breaks up your statistics and gives you 3 outcomes then. So this is a good little configuration to play with in the beginning. Now, let me show you. I think I had a. This is today when I caught the screenshot on the YM scalper, and you can see at that point it was plus 44. With it had only had a 7 point drawdown before it went positive, and then before it ended, this was a 111 max points. I just didn't get the screen capture. So the reason I'm showing you this is, if you're new, folks, focus on my recent videos of the YM and take a look at the YM. The YM's giving us really great point runs. All you got to do is, drop a contract in, and if it takes off, just hang on. Just hang on to the seat of your pants and follow that system stop. We've been getting some fantastic point runs. Let me show you one from, that's from earlier, 77 points, no drawdown. There was another one that was a really good one. But anyway, this gives you an idea. Hey folks, if you would like to learn more about our state-of-the-art industrial strength automated trade alert system, you can click on the link below. We now have 2 high-performance algos running for the ES, NQ, YM, CL, and for you Europeans, the German DAX. The software is platform independent and runs right on your Windows desktop. For you Ninja platform traders, we also have a great on-chart companion indicator included at no extra charge for both Ninja 7 and Ninja 8 now, that plots the alert software signals right on your chart.